Most people, they enjoy their salary hikes in the wrong way. Are you going to do the same? What if your next salary hike becomes the actual place whereby your wealth starts to begin? Hi, this is Anirudh Bellare here. Welcome to the 42nd video of your Best Financial Life series. In this video, you will be learning and I will be addressing this question for you. When you get a salary hike, do you need to increase your systematic investment plans? Small steps, massive wealth with time. Do you want to know the reason? And that is the sole reason why you have come to this video. Let's move on to the first and most important point. The first point here is going to be a usual asked question, which is called, as I mentioned in the start, salary hike. Salary hike is equal to SIP hike. Now, if you notice carefully, I use the word most people celebrate the wrong way when their salary hike comes. Now, what do I mean by wrong way? See, it is very easy for any individual to celebrate salary hike by giving themselves a reward, or by say going out with their family, or buying a new item for them, as in maybe a clothing, maybe a phone and all of that. Yes, I do agree, it is very important. And see, everyone's way is a different way. You may choose to use this way to make yourself happy, or you may choose one portion of your salary hike for your future needs and wants. As I have given in my previous videos, it is important for you to actually enjoy this present life and to focus on your future life as well, by giving that balance and shaping that balance for your best financial life. Now see, the question and the answer I've written here is salary hike equal to SIP hike. Now, it totally depends upon your risk appetite, what financial plan you have made for yourself. Now see, try and understand. Say for example, my age. I'm just giving an example. My age is right now 23. I'm not 23. I'm just saying. So as a 23-year-old, you can say student or whatever. Say a student, 23-year-old student. What would I do if I get a salary hike? If you ask me that one portion of salary hike, say for example, I got a 10,000 rupees salary hike. One portion of that 10,000 rupees will go in making myself happy. Now, what will make myself happy? Say for example, I bought new pairs of shoes and formal dresses so that I can make videos like this all for you. The dresses is the example of making videos for you. And say example, I bought some trousers and pants. So this is one portion of where I used my incremental salary. Now the remaining portion of my salary hike, I will use it in, there is something called step up systematic investment plan. You must be knowing this term. It's one of the most common terms in investment, called step up systematic investment plans. Now, what is the meaning of this word step up systematic investment plans? In simple meaning, if you read this word step up over here, step up is nothing but one step above the other. Say this is a staircase where you started your step, and this is your second one where the step becomes little more larger than the previous one. And slowly what happens? Your staircase keeps increasing with size. Now see, I might be wrong here, but say for example a normal staircase which you climb. Now what happens when you climb a staircase? When you try actually doing something like climbing a staircase, than taking a lift. You understand one thing, that with every step you climb, you are leaving behind that particular floor. Say, for example, right now I live in the fourth floor of an apartment. Say, for example, as I mentioned. Now, for reaching the fourth floor, I have two options, either use a lift or use staircase. Now, for keeping myself fit, I obviously use the staircase. Now, what happens? Moment I enter the ground floor, there are five steps. I mean staircases. So 1, 2, 3, 4, 5, and then I reach the first floor. Then in first floor I have another 12 staircase. Now, what happens? When you walk onto these staircases, you understand that there is one floor which has gone behind you and there is another floor after you. Exact same concept in a very differential way in your investment concepts, whereby you have something called your step up systematic investment plans. Now, there are two ideologies and psychologies for this, whereby in today's day investment demat accounts, you have this option whereby if you list down a particular date, say for example April 1st, as you know, in India, financial year starts every April 1st. Now, April 1st till March 31st, in this 1 year of 365 days, you choose to invest, say, around 5,000 rupees. And automatically, on the next year, when it becomes April 1st, 5,000 will not be debited from your account, bank account, but 6,500 will be debited. Now, how? There is an option whereby you can decide the amount to be deducted from your bank account to go for investments, or the percentage of amount growth which you want for your investments. That fully depends on you, and it also depends on your salary hike. So there are two options as I've given you. Either you have a percentage hike or you have an amount related hike. So these are the two options you get. Now see, whatever you may choose to do, it fully depends on your age, your financial plan. What are you planning to do with that wealth which you are eventually going to make in the future? Many questions arise. And for this, it is very important for you to have this word called clarity. Now see, in my financial plan, I have listed down, let's say I want a Rolls Royce when I'm 40 years old. Why? Because I just feel like having it. I know it's a very costly car, but to actually achieve it, what are those backward planning steps that I can take right now, 17 years before I touch 40 years? I write that down, or you can say not write it down, I keep it in my investment plans. Okay, every month I need to invest X amount of money, because of which it could grow at so and so percentage per annum. Nice thought, right? So the same thing can be done for you. It fully depends on your preferences and what do you want. Now see, what happens at time, this concept, you can use it if you're fully committed to your office environment or your business environment, whereby you don't need to actually track your investments. But if there is a person who actually likes to see his investment grow on maybe say a monthly basis, weekly basis, if he just likes to open his portfolio and see, then there is an option whereby you can decide, in spite of not using step up SIP, you can decide how much amount you will want to put on that particular month or that particular date. This also becomes an important aspect whereby you understand that you don't want an automatic amount deductor from your bank account to go to your investment account without you knowing, and you want to keep you want to keep you want to keep monitored on what is actually happening with your money, and that also is fully fair and fine. Now, as I mentioned, it fully depends on you because it is your best financial life series, and you need to understand that investment is subject to market risk, as I have told you. And also, I am no investment, or you can say financial advisor over here. Whatever I am teaching you, I have done it for my life, and whatever learnings I have got, I come out with content like this only for you. If you ask me, being at 23 years age, all the way when I started my investment journey after I touched 18 years old, after which I opened a demat account, is where I started my systematic investment plan of 1000 rupees. Now, this 1000 rupees, with the time of 3 years and 3 months till now, I have ensured that this 1000 rupees with step up systematic investment plans, in today's date, 4084 rupees will get automatically deducted from my bank account, and it will go to my investment account, whereby every 6 months, see, there is an option whereby you can choose every year or every 6 months. Every 6 months, so M stands for months, 35% of 4084 will get deducted from my bank account, and it will go to my investment account. Now, what is 35% on 4084? Whatever the amount. Now, say for example, the amount is 7000 rupees. Now, on 7000 rupees, not, it won't be 7000, obviously, it will be lesser than that. But say for example, okay, 5600. Now, on 5600, the next 6 months, now 6 months as in, now we are right now in June, right? So, December. By the time we reach, say, January of 2027, the 5600 rupees will automatically get debited from my account. Why? Because I don't like to keep actually viewing my portfolio saying this is the particular amount which got debited, and that also becomes an important task over here. Let's move on to the next point. Now you can ask me another type of question over here, whereby do you need to actually invest in different types of stocks or mutual funds or debt market or whatever market you take, or do you need to stick to one? See, again I mention, the answer lies with you. Depending on your age, there is a famous saying here, the rule of 80. If I'm not wrong, it's the rule of 100 or whatever. Yeah, rule of 100. If I'm not wrong, you can please Google it. Rule of 100, whereby this says 100 minus your current age will give you the answer of how much percentage of your money should be invested into the equity market. Now, what is 100 minus 23? It is obvious, it is 77, right? Yeah, it's 77. Now, according to this rule, 77% of my investments should be going to the equity market, as according to this statement. Now, with my aspect, understanding my own self, I know that I am an aggressive risk taker. So what do I usually do? I usually take investments whereby there could be a lot of volatility and it could give me lot of risk, lot of future benefit. And right now, despite of me seeing, you can say, losses for the past 2 years, it's okay. But I very well know whereby the fundamentals of that particular company and whatever mutual fund and whatever debt market I have taken, debt market as in whatever I have invested into, it will give me long-term benefits. And that fully depends on different type of people. Here right now, I've told you my perspective. Now, once you use this, whatever this is called, this point, you will get a fair idea of, do you actually need to invest everything in equities or what? Because see, right now, staying as in being in June 2026, as I mentioned, you have a lot of geopolitical events which keep on going on, and there is a lot of volatility when it comes to, you can say, the economy, because of which it reflects in the Indian stock market. And that is why it is important for you to take precautions on what type of diversification you want to do. And again, as I mentioned, you have the answer for your investments. And please consult your financial advisor. Another most important thing I'm telling you to do. I'm requesting you to do. Yeah, so more about it. Your rule of 100 and your step up SIPs. Now let's move on to the third point. Now, another important concept over here, and the continuation of the previous point, is something called cash inflow. Now, what is this cash inflow? See, throughout your life, whatever corpus of money you have created, or you can say, even if you're very young, whatever amount of money you have and you don't know what to do with it, and you feel that, okay, you do have interest in investing that money and growing that money, what you can do is you can actually invest that money into businesses, whereby when the businesses pay dividends, it directly gets credited into your bank account. And that's how cash flow works, whereby your money is invested into an asset class, whereby the asset has worked for you, even though the individual has not done anything. Thereby he or she has invested the money in that particular business which has worked, and you get that particular dividend. Say for example, I got 1500 rupees dividend example. Now what do you actually do? This will be my cash inflow, whereby one particular corpus of money that I've invested into a business because of your equity markets has worked hard. The business has worked hard, and in return, as a shareholder, it has given me certain dividends. Because of this, what happens? This can also add up to one of my, you can say, add up in my step up systematic investment plans. So see, everything over here is connected. Now, as I mentioned in the starting point, throughout your life, there will be different ways by which you can get your earning. Whether, say, for example, as I've told you, your increase in salary, your bonuses, or you can say maybe your ancestor had a business or a house which is eventually paying rent, and many other ways, right? So you actually can use all of this and you can make that money grow. Or what you can do is you can buy whatever you want, which is pretty obvious. But this video is with full dependency on how you grow up your systematic investment plans, whereby I've told you there are options. Whether you do it manually or whether you automate your money, whereby it keeps debiting from your account and it keeps growing on its own. The choice lies in your hands only when you have that clarity about what will you be wanting to do with that money in the long run. If you are very clear on this, then my friend, you do have the answer currently right now in the present of when you are watching this video. Thank you so much for investing your time to actually watching this video till the end. If you did get a lot of value by watching this video, you can do share it to a lot of people, as I feel there are not a lot of people who teach financial education, and whereby I feel like I want to be one of them. And if you really liked the teaching style of mine, as a favor, you can do share this video to a lot of people. Thank you so much once again, and thank you for your precious time. Thank you.